This is Eric Mother.com with about 1 hour to go before the end of the week, which is an options expiration week. This is where markets are trading right now. Again, 1 hour to go before the end of trading for February 21st, 2020. And let me refresh this chart here for the S&P 500 2-year weekly. And I'll show you the number we've been watching all week for a potential breakdown in the current market weekly breakout. And the breakout level there is at 3329.62, which goes back to the weekly closing high from January. So we've been above that for the last 2 weeks. So whether we can hold above this level or not should determine where the market goes. In other words, bulls want to see the S&P 500 defend this price level, hold above it, and build for higher prices. Otherwise, bears would be encouraged to see the market break, because we know that failed breakouts are notorious for destroying markets. Now, before we go into that, take a look here. During the week, I sent out analysis where I was talking about the S&P 500 looking like it was confirming what the Dow was doing, and I'll show you the line. So the line we were watching during the week was this line here. Speculation was that the market had come back as it was making new highs, and it was seemingly being rejected here, and so we started speculating that there's a likelihood of a pullback. And also that took place while we see a price advance to new all-time highs, but this was followed up with a decline in the RSI strength, so aka negative divergence. And because of that, we can see that that was the look that has led to this shallow pullback so far. We'll see whether it's going to be a deep pullback down the road, but that was a negative divergence that gave us that little bit of a suspicion that the market was due for a pullback. Now, one thing I also observed was that how the market is going to behave is going to be dependent on a couple of things, and one should not expect a big market washout until, and I mean a washout to the downside, until we break this RSI lows line right here. So this line would have to break first and foremost before the market can really see a major slide. It's a well-defined line connecting recent RSI lows, and as long as that line is holding, the market continues to be within the range of a healthy pullback. Now, we also saw that on the 2 hourly for the S&P 500 during the highs for the week, that it was giving us negative divergence. Again, if you were watching this, it was very self-evident, because we were making an improvement in price highs, but yet you can see here there was continued resistance as far as the RSI was concerned. In fact, RSI was clearly not moving higher. In fact, was showing resistance on the RSI topside resistance line, as we can see here, while the market was making new highs. Again, that's a classic case of negative divergence, and that's one of the things you need before you can see a pullback in any trading instrument. Now, of course, there was also this line here for those who've been following me, especially for paid subscribers. You know that this has also been an area of resistance, and even as the market went higher, this was repeatedly confirmed, and so the pullback makes sense. So again, as far as the S&P 500 is concerned, we also need to understand that we won't see a major market collapse until this line breaks. It's the line connecting recent RSI lows on the S&P 500. On the 2 hourly, this line would have to break, and of course the line connects recent lows. If it can hold, then that's constructive for bulls. In other words, a bounce on this line is what the bulls want to see to start engineering a move higher. But what the bears are waiting and patiently hoping for is for a break below that line to really begin a major slide in the general market. Now let me go back and take a look at the market here with about 50 minutes to go. Now, depending on how we trade, we're going to see whether we have a continued push low. In other words, if the market is going to drop even further and see a major drop, maybe additionally to the downside. Why? Because it all depends on how the market is going to respond as it comes now to test the RSI 50. And let's take a look at the S&P 500 first. S&P 500 trading at about 52.38. So if it cannot hold above 50, so 52.39. So the risk here is that the S&P 500 might slash below 50. If it does, expect the market to close even lower and close to the lows of the day. We can see that the Dow has already dropped below 50, which might be a reason from a technical understanding standpoint why this market is seeing a relatively expanded move to the downside. So because the Dow is below 50, it means that more than likely these markets are going to hold on to the losses for the day, and we are going to close towards the lows of the session. That's generally what happens when you are trading with the RSI dropping below 50. Now, take a look at the Dow. The Dow has a little bit of a different look and feel. We can say that the Dow was the leadership on the way down, because as the market was making new highs, take a look at the Dow's daily RSI. That was a clear negative divergence, which we pointed out midweek could be the setup for a move lower. And also that was confirmed by the backtest failure line that I showed you on Wednesday, which is this line right here. And again, this was confirmed with resistance on a couple of occasions here for the month of February, and now we are seeing the result of that. Also, we should also understand here that a major drop in the market won't take place until we break below recent RSI lows line. And let me draw that line for you. It is this line here. This line would have to break before the market can see a major slide. It would be similar to the market needing to break below the 50-day moving average if there's going to be a substantial drop in the general market. Now, as far as the Dow is concerned, the Dow is the first of the major averages that is showing a weekly breakdown on its recent breakout attempt. And we can see here that the recent breakout has now failed. And this is exactly what the bears wanted to see, a failed weekly breakout for one of the major averages. So the Dow is giving bears exactly what they needed there. The level we were watching there for that breakout was 29,348.10. So now that we have a failed breakout, this is not good as far as the general market is concerned, because it now opens the probability, increases the probability of a substantial pullback in the general market. Also, this is being followed up, or confirmed I should say, by negative divergence as far as this weekly chart is concerned, and that negative divergence is going to set the stage for a substantial pullback in the market. Now keep in mind, we also need to be aware that yes, you can get pullbacks even within a strong bull market. Pullbacks are healthy, and it is only if we end up breaking below this line here, which is the line connecting recent weekly RSI lows, that we would now be expecting a major breakdown in the market. So this is a well-defined line. This would need to break if the market is really going to see a substantial drop. And of course, that's a couple of weeks away. We'll see how it goes if we get to that line. Of course, at some point, the bulls would want to see a bounce on this line, or maybe even later on support at the RSI 50 level. All those things are going to play out as we go forward. Now, one thing I want to point out here is if I go back to the S&P 500 weekly chart, and this is 2 years of weekly data, notice that there was a breakout here attempt in September of 2018 that failed. That failure also came with negative divergence because prices were moving higher, but the RSI was showing a drop, or at least was at the same level. So that negative divergence, I can say, was one of the reasons why we eventually rolled over. And now, depending on how things go, is if we end up failing to hold this breakout level here, and given that we already have this negative divergence, that this could also be setting the stage for a substantial pullback as far as the S&P 500 is concerned. Again, the number to watch there is 3329.62. That is the number. Bulls want to see the market holding above that level, while bears would be encouraged to see the market break below that level, signifying a failed breakout as far as the S&P 500 is concerned. And of course, to complicate things even further, let's not forget the monthly charts. As long as the monthly charts are holding above 69.1, then the market should remain relatively stable and even have a bias to the upside as long as we are holding above 69.1 as the NASDAQ is doing. If we fail to hold that level, then that might change the landscape. S&P 500 slightly above 69.1. As long as it's holding above 69.1, let's give it the benefit of the doubt. But if it drops back below that RSI level, be on the lookout for major change in the market's direction and tone. We can see here that the Dow is struggling to hold above 69.1. As I mentioned in this video, the Dow is probably showing leadership on the way down if there's going to be a major down move, because the weekly for the Dow has failed and the Dow also did not hold above 69.1. So the Dow could be giving us an early indication of what the market might do down the road. This week we've seen gold move higher, trading at 1648 right now, and this shouldn't be a big surprise because we've seen gold setting up very nicely. If you've been watching this should have been pretty obvious that gold was potentially looking to go higher because it gave the minimum requirements for the ultimate Moade breakout. And now we are seeing this price breakout being followed up with the minimum requirements for the ultimate Moade breakout as the RSI is moving above 69.1. And we can see that the MACDs are trading at 3-year highs. So gold has already given us that look, and that's why we were playing gold in the middle of the week, because we could see that there was potential for this breakout. And that's all I'm gonna say as far as gold is concerned for now. In fact, some gold names have been on fire quietly over the last couple of months. As you can see here, SBGL has been one of the leadership stocks in the gold space ever since this breakout here. In fact, we captured that breakout, and if we take a look at how many times I've mentioned this stock over the last couple of months, you can see the early mention was in September here during that breakout, and other mentions as far as paid Moade.com subscribers are concerned, and breakout alerts that I've been sending out over the last couple of months. So it's been a good one. And again, the key breakout was here. So we can say quietly, some of the gold stocks have just been creeping higher. And now we see that gold itself is also catching some upside momentum. And as far as gold is concerned, as far as GLD is concerned, if it can hold above 69.1 on the monthly, then gold should continue being stable to bullish. A quick look at USO, and we can see here that it's been trading in this range since about 2018, late 2018, on a monthly closing basis. It's been trading within this range. So USO or crude oil, very tough to read, but no momentum as far as I can tell here. In fact, if we take a look at XLE, we can see that there's a risk that if it breaks below this 2018 monthly closing low, if it breaks below that price, that would set off a major sell-off, and the price to watch there would be 53.73. And again, this is the monthly closing low from December 2018. If it can hold above that, great. But if it ends up breaking below that with a down market, if the market cracks, this would probably crack also. Keep in mind, this would be a major sell. And the reason why it would be a major sell is because it is very close to 3-year lows as far as the RSI on the monthly is concerned. And we can see that the MACDs are already trading at 3-year lows. So this is pretty much meets the minimum requirement for the inverse of the ultimate Moade breakout, which is what I call the ultimate more the sell signal. So the risk here is a break below 53.73 might take this market lower. I'm gonna keep this weekend's market analysis short and to the point, and I'll leave you here with about 30 minutes to go. This is how your US markets are trading. This is Eric Moore, Mother.com. As always, good luck, peace, and blessings. EACS.